welcome to the Global View on this Wednesday morning. It's a pleasure to be here with you. I'm Nadine Blaney. Let's get you across what happened overnight, because it was an interesting session after sliding in early trading as the war in Ukraine escalates and Russia warned on its updated nuclear doctrine, which sent European stocks to a 3-month low. By the end of the session, 2 of the major U.S. indices ended higher. The Russell 2000 at one point in the session was at its lowest since the U.S. election, but as you can see, it too ended in positive territory. NVIDIA, which reports third quarter results tonight, gained close to 5%, boosting the S&P 500 infotech sector. But most mega cap stocks, including Apple and Amazon, also trended higher and as a result lifted the Nasdaq. At its Ignite conference, Microsoft said that it's designed 2 additional infrastructure chips for its data centers that will help speed AI operations and increase data security. Walmart hit a record high after it lifted its annual sales and profit forecasts for the 3rd consecutive time. And home improvement retailer Lowe's lost close to 5% despite forecasting a slower than expected drop in annual comparable sales. Gold miners rose as gold hit a 1-week high on safe haven buying as those geopolitical tensions rise. And U.S. defense stocks were mostly higher as well. Well, U.S. listed shares of Piedmont Lithium gained ground after merging with ASX-listed Sayona Mining, which is one that we'll be watching here locally today. We'll also be watching Amcor after the Switzerland-based company did merge with Barry for a combined entity. It's a deal worth $13 billion. Well, in commodities overnight, we did see Brent crude oil futures falling marginally with a pause in production at the North Sea restarting. Copper rose 0.5%, iron ore rose 2.1% to $102 per wet metric ton. Gold, as I said, climbed. That's the 2nd day in a row, and actually hit a 1-week high on those mounting Russia-Ukraine tensions, which really did spark a rush for safe haven assets. Well, rate cut expectations are still very much at the front of investors' minds. Federal Reserve Bank of Kansas City President Jeffrey Schmidt said that it remains uncertain just how far interest rates can fall, although he says that the initial reductions made by the U.S. Central Bank are a vote of confidence that inflation is returning to the 2% target. Canada's annual inflation rate rose more than expected to 2% in October, causing markets to scale back bets on a big rate cut next month. It was the first pickup in the annual inflation rate since May, but was largely in line with the central bank's expectations. Back in the U.S., single-family home building tumbled as the impact of 2 major hurricanes hit activity in the south, while permits rose just slightly. The 10-year yield fell before steadying at 4.38%. Markets are pricing in a 55% chance the Fed funds rate will be cut by 25 basis points at the next FOMC meeting on the 18th of December. The U.S. dollar was little changed on the day. U.S. dollar index, I should say, the Aussie dollar trading at 65.3. And Bitcoin, it's come off a bit, but it did cross the 94,000 level for a fresh all-time high, as options trading on BlackRock's iShares Bitcoin ETF looks to be imminent. And there's still time to register for our next virtual investor event being held at 11 o'clock in Sydney here today. Go to ausbiz.co/cryptofomo, CRYPTOFOMO, for any of you who are crypto curious with this parabolic rise in Bitcoin looking set to continue. Well, let's get across what moved the markets in the United States. And for that, Brad Gastworth is joining us from Unearthing Opportunities. Brad, hi, welcome. Nice to see you again. I think maybe instead of starting with what happened, we should start with what's to come with NVIDIA. I mean, there's just so much weight of expectation baked in. What are you expecting?
Yeah, Nadine, it's really the topic du jour for sure. I'm expecting solid report and solid guidance. The question that really is on most investors' minds or analysts' expectations, have they gotten ahead of themselves given the execution we've seen over the last several quarters? We've also had some conversations about potential components going into chips, and has that had any issue with production? I do not think it's been an issue. I don't think that will really have any bearing into guidance. Obviously, we'll find out rather shortly, but I expect really solid results. I think it will still be enough to move the needle, and I expect that stock to continue to make new highs post results.
Yeah, really incredible. And we will be talking about it this time tomorrow, no doubt. Talk to us about Alphabet, so Google's parent company, because it looks like the Department of Justice in the United States may actually enforce some sort of a sale of the Chrome app. I mean, we use it widely here every day. So what's the story?
Yeah, I mean, it's like a day doesn't go by without some crazy, new excitement here in the tech land in the United States. But it looks like the Department of Justice wants to maybe force Alphabet to sell Chrome. I mean, the Chrome asset by itself is in the tens of billions of dollars. The question really becomes who is the real natural buyer of that asset? I mean, the ones with the deepest pockets, like in Apple, Amazon, that would never be allowed. So would it be private equity? That's what my best guess would likely be. But there's still a wait and see. Will they be forced to sell it? I think with the news articles and what's being reported, I think it's likely that they will. That stock has been resilient, posted. I think some people thought you'd see a major rise following those comments. I think they'll get a lot for the asset. Obviously, it's been a great asset for them, but given the fact of monopolistic components, it makes sense that the DOJ would come in with this.
Yeah, all right. So we'll be watching Google or Alphabet, as I must call it. So just sticking with corporate news then for now, Brad, we heard from Walmart, we heard from Lowe's, we've heard from many of the U.S. retailers. So what is the sense that we're getting about the upcoming Christmas shopping season, the all-important Black Friday sales? What indications do we have?
Yeah, Nadine, I think this is it's a really good question because I think it's really important. And you got Walmart that just had, I believe it's the third straight consecutive beat and raise. I think you're going to see a very strong Black Friday and Cyber Monday here in the United States. The U.S. consumer is obviously one of the largest purchasers, and they've been very resilient. Now, debt levels have also increased dramatically, and that's something we can't ignore. But I mean, the retail sector, I expect to see, a nice little pop post, when we get those results back on what the retail sales numbers were like after Black Friday. I think Amazon's going to lead the charge. I expect, very strong numbers from Amazon. But even these more discount retailers, like again, we had a Walmart just gave their, forecast and guidance, which is phenomenal. I think you'll see, these budget retails also perform quite well. So I'm expecting very strong retail numbers going into the end of the year, and I think that'll lift that group.
Okay, so do you buy companies in the retail space, Brett?
So I look at them. I think, sometimes they're interesting. If you look at things, you need to look at the trends and see what could be hot and what's not. But ultimately, I mean, that's, tech is something that is really my specialty. But I certainly look and pay very close attention to that whole space because there's a lot of moving parts and they could have some big impact to numerous things.
Yeah, I was just curious because I know that tech and Walmart's tech stack was something that was mentioned in the analyst call as well. So really interesting. And then let's just get to the broad picture before we've got to let you go. So we've got these ratcheting up of tensions between Russia and Ukraine. I mean, we've been through this over the past couple of years with an escalation and de-escalation. It's in the headlines, it's not. Geopolitics, is that a sleeper issue for investors potentially in 2025? Not only do we have Ukraine, we've got the Middle East, and we've got the U.S. inauguration to happen on January 20th.
Yeah, I mean, you're absolutely right, Nadine. I mean, if you look at the macro side of things, the market and the global markets have really ignored some major things that have happened over the last several years. From the first U.S.-China issues on the trade war side, you got the Russia-Ukraine, which has been ignored. Even the Middle East tensions have mostly been ignored by global financial markets. Now, what the news that we just learned, you guys brought this up, and I thought you made a good point. I mean, these markets all were red after that news about allowing Ukraine to use those long-range missiles into Russia. But look what happened in the U.S. market. It turned green, I think, majority of the indexes, at the end of the day. So we're really right now ignoring some major macro, situations. And I think it's very important to monitor them. Will this time be different and will it derail the markets? I mean, I guess we'll wait to see. Ultimately, I think on the Middle East side, I think there's some bigger things coming there. And I think those tensions will cause oil to increase. On the Ukraine-Russia, it'll be, will Ukraine do drastic moves? I mean, obviously, the rhetoric from Russia on using nuclear is quite worrisome. But then also, to your point about bringing in the whole global aspect, you just had Biden and Xi meet, and they both agreed on not bringing nuclear weapons into the mix. But ultimately, these are major crossroads that we're dealing with, and it's been surprising that the markets have ignored them, but they have in the past, and I think they might do that also going forward.
Okay, and just before I let you go, because I do know that you keep an eye on Bitcoin as well, all-time record high again in the U.S. session. Obviously, we've got a president-elect who is promising to be favorable to cryptocurrencies. Regulations are changing, but also we've got, the financialization, so to speak, of, these cryptocurrencies. We've got BlackRock's ETF options, imminently to be traded on the NASDAQ. Are we due for a correction?
Yeah, I mean, well, we got a little bit of a pullback. I mean, it hit new highs at that 94,000 mark. I think we will see a little bit of, of a retractment. I think that's normal in all scenarios. Nothing goes straight up into the right, but there's a lot of headwinds that are favorable for cryptocurrencies and Bitcoin specifically. So I mean, with the Trump administration coming in, which is very pro crypto, then you have the likes of these very strong crypto companies like a MicroStrategy that's buying a ton. I think they just added another $4 billion to their portfolio. Now you have that, some of these ETFs and some options trading. I mean, this is positive for that space. Now, I think we will see a pullback. I think we'll get a better entry point, but ultimately there's a really bullish underlying theme here for crypto.
Okay, well, look, I think we've covered a lot of ground, Brad. Thank you so much for joining us. We really appreciate your insights.
Thanks, Nate.
Take care. Brad Gatsworth from Unearthing Opportunities, and he was live joining us from the East Coast of the U.S. I think he's just outside New York. So yeah, we're looking forward to NVIDIA tonight, but we've got a lot for this local market to digest. That big news of Amcor's merger with U.S.-based Berry. It's a packaging company, obviously, and it's more leveraged to beauty and pets and personal packaging from what I can understand. So we'll be watching Amcor, we'll be watching Piedmont Lithium, Sayona Mining, we'll be watching Nick Scali as well, that has come out with a bit of a warning in terms of hitting its guidance. And also Web Travel Group, which is out with its earnings as well. So stay with us, we'll get you across everything you need to know. The Open is next.